Yo. Welcome to the weekly market outlook for today. Let's get right into it, shall we? Okay. So first things off is I want to start off this video with looking at the economic calendar today or next week. So we have no news coming in to Monday. However, we do have news on Tuesday. CB consumer confidence and JOLTS job openings at 10 a.m. On Wednesday, we have non-farm employment change. So this is going to be a NFP week and a FOMC statement week. So we have a really big news this week. We tend to have really good price action Mondays and Tuesdays, and like around the New York AM session on Wednesdays when it's an NFP week. But this NFP week is a little bit different because we have FOMC on Wednesday. So yeah, very, very volatile week. Wednesday is a day that you should really pay attention to because it is the day that we close on the monthly candle, and we have FOMC that day, and we have that ADP non-farm employment change, and on Friday is the non-farm employment change. So basically it's NFP Friday. So yeah, very, very eventful week this upcoming week. So I do want to go over I want to go over briefly the trades that I did took this week and what actually occurred this week. So this week we had a Tuesday high of the week on ES here. So we had a Tuesday high of the week. We didn't retrace into a daily FEG here. And we created the high of the week on Tuesday, and we displaced lower coming into Wednesday, and Thursday we created the low of the week, and Friday was TGIF setup. So what I mean by that is, so you want to think the weekly candle in terms of power of 3, because everything you can apply power of 3 to every single candle, every single time frame. So coming into Friday, I already noted out, okay, at basically when we opened up at 6 a.m. I believe, we already retraced into the 0.2 to 0.3 of this of the weekly range, and that's basically what TGIF is. And so, like I said, I wasn't really anticipating for us to take out previous day high yet, and if we treat yesterday's low as sell side, right, it should have been taken. Whenever we retrace into this hourly FEG here, but we treat this FEG as a inversion fair value gap. We don't respect it, and we close above it, and then we started treating it as an inversion. So after we closed above this hourly FEG, that was when I knew, okay, Thursday's low isn't probably going to be taken, and we're probably going to consolidate because we've already completed all of the weekly objective, and we already even retraced into the 0.2 to the 0.3 of the weekly range, which is TGIF. So yeah, and the trades that I do want to go over this week, let's go at the pros and cons here. So the first trade is I want to go over July 22nd's trading day. My mouse is like it's like broken almost, I think. Okay, so on Monday the trade that I took was based off of this 4-hour candle closure here. I wanted to treat this 4-hour FEG here as a breakaway gap, so I didn't want to see prices retrace back into here, right? And based on the 4-hour FEG or 4-hour power of 3, I can anticipate for us to take out this 4-hour high. The hourly time frame as well on the hourly power of 3, I can anticipate for the high to be taken, And the trade I took here was actually based off of this 15-minute power of 3. So the hourly, that 1 hour is telling us that we're going to go higher, right? But on the lower time frames, that's when you can find out when will we take out that high. And that's basically what I based my trade off of here. So I noted out this 15-minute fair value gap, right? And it looks like we're showing respect to it here. We don't close below it, and we're just wicking outside of the fair value gaps range. So wicks do the damage, bodies tell the narrative. And after I saw how prices came into this 15-minute fair value gap, respected the consequent encroachment and priced higher, and created a bullish 15-minute power of 3, I was anticipating for us to take out this 15-minute high and the 4-hour high. So now I have time frame alignment. I have the hourly, 4-hour, and 15-minute in alignment with each other. So I go on to the lower time frames to see if there's a supporting idea. And on the lower time frames, there's a 5-minute fair value gap here. So prices, whenever prices do retrace back inside here, I will take the trade if the 15-minute objective is still intact. So we leave the 15-minute high here, we retrace into the 15-minute or into the 5-minute FEG, and that's where I took my entry. It was a losing trade, but this is a trade that, like I said, I'll take all the time. One thing I should have taken into consideration was that ES took out its 4-hour high while NQ didn't. So this, I should have seen this SMT and recognized it and should have mitigated my risk even more, because like I said, if ES had taken out that high already, then NQ can either pursue it and have that six sister approach, or there's manipulation occurring between one of those markets. And yeah, there was manipulation on ES, and then we started displacing lower on NQ after this trade. So that was one of the one of the better setups. Like I said, even though it's a losing trade, it is a part of my trading strategy. If I see my setup occur, then I'm gonna take it. And I saw the setup occur, I took it. It's a losing trade, whatever. I'm content with the outcome. One of the better trades this week was actually on Wednesday. So go back to what I said about the weekly template. So Tuesday created the low, or Tuesday created the high of the week, and then we started seeing displacement during the pre-market on Wednesday. So that led me to believe that we are going to we're having a higher time frame shift here. We're starting to shift bull or bearishness on the higher time frame. And so these price ranges are going to be extremely large. So the trade on Wednesday I took was actually based off of this 30-minute power of 3 here. So based on this 30-minute power of 3, I can anticipate for us to take out the 30-minute low. And notice how we're closing. I'm not anticipating for prices to retrace back inside this 30-minute fair value gap. I'm gonna treat it as a breakaway gap. And even on the 15-minute time frame, we retraced into a 15-minute fair value gap, and then we had a bearish power of 3. So the 30-minute and the 15-minute are aligned with each other, right? On the higher time frames, we're displacing lower. We're gonna probably take out monthly high, the June 11th low of day and June 10th low of day. So like I said, on the higher time frame, we're displacing. We're having like a daily market structure shift here, and expansion lower on the weekly and daily time frame. So I'm gonna align myself with the trade on the lower time frames. So like I said, I'm targeting that 15-minute low, and my terminus here would have been that 30-minute low, because like I said, we're bearish on the 30-minute and 15-minute as well. So I go into the 1-minute time frame. I note out this 1-minute fair value gap that we have here. So whenever we retrace back inside this 1-minute FEG, that's when I took my entry, and I'm targeting 15-minute low and 30-minute low. 30-minute low was my terminus. This is actually a 1.64 to a 1 wristable board. So if I'm targeting the 30-minute low, which was my terminus. So I didn't take any partials off at the 15-minute low. All I did was move my stops to break even. So I didn't take any partials off at the 15-minute low, but I moved my stops to break even. And then when prices took out the 30-minute low, that's when I took off all my positions. That was my terminus. And then I believe actually Wednesday was the cleanest trading day so far. This week or this previous week, extremely precise price action. It's super nice. The second trade on Wednesday I do want to talk about was an A+ setup. So the previous trade I talked about here was an A+ setup as well. Yeah, A+ setup as well. So this next trade on Wednesday here is actually an A+ setup as well. And so notice how we retraced. This is the hourly time frame here. But we retraced into this hourly time frame or hourly FEG. We create this hourly bearish power of 3. So what this is, what I'm thinking in my head here is, hey, we just came back into a 1 hour FEG and we had a really bearish closure. And with that bearish closure, I can at least anticipate for us to take out that hourly low. So there was no setups to target that low. So I just continue to watch price action. On the 15-minute time frame here, we created a 15-minute fair value gap. We retraced into it and we respected it. Notice how pay attention to this marker right here. This one. So this 15-minute candle, I can anticipate for us to take out that 15-minute candle's low because I understand why we created that power of 3, right? We created it because we came into a 15-minute fair value gap and we showed bearish pressure to it, or bearishness. So I can at least anticipate for that 15-minute low to get taken. And in confluence with that, it is that 15-minute low is also a 30-minute low. So there's time frame alignment. So both time frames have the same objective. So now this is when I would go onto the lower time frames to find an entry. On the 3-minute time frame, there's a 3-minute fair value gap that supports the idea of us going lower. So whenever prices, retraces back inside that 3-minute fair value gap, that's where I take my entry. So I note out the 15-minute and 30-minute low, right? We opened up at 230. So we spiked up into the 3-minute fair value gap and we took out that 30-minute and 15-minute low. That would have been my trade right there. In and out, real simple. And then I would have moved my stops to break even, of course, whenever we take out the 15-minute low, and then I would have got stopped out here. But notice this next 15-minute candle here. This one right here. Can you guys see my mouse? Based on this 15-minute power of 3 again, and we're treating this fair value gap as a breakaway gap. I explained why in my fair value gap theory video. So if you guys want to check out why I treat this as a breakaway gap, you guys can check out the video there on my YouTube channel. But so going back to this trade, based on this 15-minute power of 3, I can anticipate for us to take out that 15-minute low, and we're going to treat this 15-minute high as a strong high as of right now, because like I said, this fair value gap should be treated as a breakaway gap. So on the lower time frames, there is a 1-minute fair value gap, and larger fair value gaps I've seen, like, it's not like this is concrete every single time, but larger fair value gaps on the 1-minute time frame tends to be respected. So we retrace back into a 1-minute fair value gap at 245. I take my entry there, and notice how on the high time frame we haven't completed out the objective yet. So June 11th low hasn't been taken yet, and we retrace into a 1-minute fair value gap. So you can enter here and even target June 11th low and even June 10th low. So on the higher time frame, we still have an objective to complete on the weekly and daily time frame. On the lower time frames, that's when you can just really narrow in and really zoom in into your entry, because like I said, if the higher time frame is in confluence with the lower time frame, that's like very, very strong. So those are the trades that I did want to go over this week. Those were both of those trades I just went over there were A+ setups. Super nice trading day on Wednesday. But coming into this week, I am anticipating for Dixie, so let's actually go and pull up the Dixie charts here. So we are within a weekly BISI and a weekly SIBI. So a bearish fair value gap and a bullish fair value gap. We're within that right now. What do you guys think we should do here? I'll give you guys 5 seconds to answer. 5, 4, 3, 2, 1. If you guys said that we should sit on the sidelines, you got that correct. Whenever we're trading between two PD arrays and they're like a weekly fair value gap and also a weekly fair value gap and they're opposing, that's when you can just sit on the sidelines. Because like, what are we as traders? We're not supposed to be correct every single time. We don't trade because we know that we're going to be correct. We trade because there's certain setups that align with, you know, how we trade and how and the probabilities are just in our favor. We're not forced to anticipate every single correct move. Whenever you see a condition or a setup that just, you know, you can formulate a trade plan for both sides, that's when you want to sit out. So like I said, we're within a weekly BISI and a weekly SIBI. For me, on dollar coming into this week, I would stay away from it. I would sit on the sidelines and watch, hey, are we going to respect this weekly SIBI here? Or will we respect the weekly BISI? So if we respect the weekly BISI, which is the bullish fair value gap, we should close above the SIBI, right? The weekly SIBI. Close above it and treat it as an inversion fair value gap. And that can be shown on the daily time frame. So if we start seeing, you know, bullish daily power of 3 candles, then that means we're disrespecting the SIBI and vice versa. If we disrespect this SIBI, the weekly BISI, and we close below it and we're showing bearish daily power of 3, that means we can anticipate for lower prices. And yeah, that's my analysis for the dollar. So I would be sitting on the sidelines. I'm neutral. I'm gonna decide to just, you know, stay away from the dollar unless we can see, you know, clear displacement to one side, whether that be to the upside or the downside. I don't care. I'm a trader. We get to decide when we're gonna risk a trade or not. So coming into NQ, if you guys, I always refer back to this, but if you guys watch my fair value gap video, what can we anticipate for this weekly fair value gap to be treated as? If you guys answered a breakaway gap, you guys got that correct. We also closed below a weekly inversion fair value gap. So this is signs of extreme bearishness. We're not going to retrace all the way back inside this fair value gap. That's just not efficient. But however, we do have a daily fair value gap though. That means we can retrace back into here, just based on how we're looking as of right now. So I want to see us respect this daily fair value gap and take out previous week's low. Previous week's low is my weekly objective for this week. And like I said, we're closing on the monthly candle on Wednesday. So whenever we close on Wednesday, pay attention to how we close, because you can apply power of 3 to every single candle. This monthly candle right here. What can we anticipate? Just anticipating. You're not, you don't have a clear setup yet, but what can we at least anticipate? For us to take out this monthly low, correct? That, if you guys guessed the monthly low, you guys earned a cookie. So I'm anticipating next month, at least during August price action, that monthly low, July's monthly low, would be my draw of liquidity. If we close like this right now, but let's just say, like, God forbid something happens and we close all the way up here, then it's different. But like I said, I would wait to see how we close on Wednesday. But if we close right now if we close on this monthly candle right now, I can at least anticipate for us to take out this monthly low. And do we have any supporting PD arrays? We have this daily fair value gap. We have this weekly fair value gap here as well. We have this weekly inversion fair value gap. So we have supporting ideas that is in confluence with us taking out that monthly low. So let's take a look about what I said here on NQ. We have bearish closure on the weekly time frame. Based on the weekly power of 3, I can anticipate for prices to take out previous week's low. Notice how we created a weekly fair value gap. I'm going to treat that as a breakaway gap and like to see prices attack the previous week's low before rebalancing the weekly fair value gap. We have a daily fair value gap, so if we do retrace back into it, it should be treated as resistance. Objective this week is previous week's low. One thing to note is that the monthly candle is closing on Wednesday. So check out if we have some sort of TGIF. Okay, so that's the thing I missed. TGIF. ICT taught us TGIF on the weekly candle. But if you apply the power of 3 concept to every single candle, you can apply it to the monthly candle as well. So if we apply TGIF here on the monthly candle, we can anticipate for us to retrace back into this 0.2 to 0.3 of this range. And what actually aligns with this in this range here? This daily fair value gap. This daily fair value gap is within this range. So that means we have confluences here. Okay, I didn't even notice this, but this is a good thing I created this video. So we have a reason for us to retrace back inside this 0.2 to 0.3. Sometimes TGIF doesn't occur, but this is the sole reason why it doesn't occur sometimes, because there's no reason for prices to retrace back into the 0.2 to 0.3. But if there is a reason, and it looks like NQ, there is a reason for us to retrace back inside the 0.2 to 0.3. And that reason being is the daily fair value gap. That means we could anticipate for us to retrace back inside this daily fair value gap and retrace and close within this 0.2 to 0.3 of the monthly range. So that's like secret sauce. That's actually secret sauce. But yeah, just pay attention to TGIF. And let's get onto ES. So ES, it's about the same thing. The only difference on ES here is that we don't have a weekly. We didn't create a weekly fair value gap. We closed below a weekly BISI though, so this should now. I don't know if we're gonna retrace all the way back, or I don't want to see us retrace all the way back inside this orange box here. That would indicate, hey, we're not as bearish, because if you see, if you just look at, if you just pay attention to which PD array comes first, we should treat this daily fair value gap as a resistance and trade lower. We should not see something like this. We retrace above the daily fair value gap, past its consequent encroachment, and use this weekly fair value gap as inversion. We could do that, but that doesn't indicate bearish price action. That is not that's not what we want to see whenever we're bearish. We want to see us respect the consequent encroachment of SIBIs whenever we're bearish. So I can anticipate, if we close on the monthly candle here, I can anticipate for us to take out this monthly low. On the weekly time frame, I would elect to trade bearish setups to target the weekly low, but that's only if we can get some sort of bearish power of 3 on the daily time frame to target that weekly low, and then we create something like that. That would be it. That would be a setup right there. This little retracement here, that's a setup. But yeah, coming into ES this week, I would elect to see us take out previous week's low And on Wednesday, if we have a bearish monthly power of 3, I would like this, like I said again, to also take out the monthly low. And we have supporting PD arrays on the lower time frames. We have a daily SIBI, which should be treated as resistance. And we have that weekly inversion fair value gap. It's not necessarily that we could retrace all the way back up into it, but it tells us a lot whenever we do close below it. Prices doesn't necessarily have to retrace back into all the way into the weekly inversion fair value gap to tell you that we're bearish. Just the fact that we closed below it is already enough for me to say, hey, we're bullish, or not bullish, bearish. Excuse me. On Monday's price action, this is what I'm anticipating here. I know there's a lot of lines on my charts, but there's purpose behind these lines. So this high right here, this swing high, we actually traded into a daily fair value gap, and we displaced lower. We created a daily fair value gap with that price lower away from the daily fair value gap. So I'm sorry, that sounds so confusing. We created a daily fair value gap after we reacted to the first daily fair value gap. But coming into Monday, I'm anticipating for us to take out the previous day high. So I'm anticipating for us to take out Friday's high of day. And I want to see us retrace back inside this daily fair value gap. So I want to see us rebalance it. And notice how it is also in confluence with buying in premium, or selling in premium, sorry. So I want to see prices trade back into the premium of the price leg and then sell off lower. And hey, how did you get the premium of the range? Like I said, I took the major swing high that was created whenever we retraced into a daily fair value gap, and I took the lowest low, and I just took that high to low, got discount in premium, and whenever we're bearish, we should be selling in premium of the range. And I think that's gonna be all for the weekly market outlook this week. One key note is you want to pay attention to the Wednesday's price action. I would advise you to do another higher time frame analysis because we're closing on the monthly candle that day. So on Wednesday, I mean, it shouldn't take too much time. I mean, it depends on where you're at as a trader, but I would advise to take another look at the higher time frame, because you probably think to yourself, hey, I already did my weekly analysis. There's no point of me doing even more analysis on the higher time frame. But well, there's a reason on me telling you why that you should do another analysis on the higher time frame, and that's because we're closing on the monthly candle. That's extremely, like I said, that's extremely important, because the next monthly candle, you have to think of the next monthly candle is in terms of power of 3 as well. So right, if we're creating a bearish candle, a down close candle, what do you always want to see first? You want to see some sort of accumulation, right? That manipulation. So you create the high, and then the distribution, and then the close. If we're applying that exact theory on the monthly time frame, that means you would want to at least understand where the monthly open is. You want to know where the monthly open is. You want to know where, so we can, orchestrate or make a trade setup, and you want to be trading in alignment with the higher time frame. I completely lost my train of thought. I forgot what I was gonna say, but I forgot it. Yeah, let's see what I also have to do for this video. So with that's gonna wrap up my weekly market outlook. Hopefully you guys you guys can screenshot this my work here. I don't really care. I mean, I only do these videos so like that I can help you guys, and it also reinforces what I have already in my head. The last thing that I want to do here for this video is, guys, join the Discord. I do I do intraday market outlooks. So I always post my weekly outlooks on YouTube, but I never post a intra-week market outlook. So on my Discord, that's where I do all of that. There's tons of, I post a daily quote every single day on there. So like on Sunday today, the quote for today is, Sunday is a time when you sit back and reflect on all the blessings that you have received the past week. Smile at all the good things in your life. Yeah, and I do these things like daily. I have voice channels on here where you guys can get direct contact of me, and if you guys have a question, I'm more than happy to help you guys. And we can hop onto call and help each other out. And yeah, I have a lot of ideas and goals for this channel. For right now, I do want to just focus on growing it, but yeah, please consider joining. I would be very thrilled to have you guys join. And yeah, I'll catch you guys later on the next video. You guys have a safe day, okay? Peace out. Bam.